Hey traders, Nick Shaheen here, looking at Apple take 3. Yes, this is the third attempt at this stinking video. Oh my gosh, it's a comedy. So, we're not looking at Apple. What are we looking at here? Okay, we're looking at the TLT. So, you'd think that this is some crazy stock like Tesla or Tilray or Beyond Meat, this kind of action. That's the stable market of the US bonds. Are you kidding me? Fed, stop meddling around. Anyway, so they're saving the economy, but look at what's going on in the stable market of bonds. These are daily candles, folks. Just what? Anyway, that was insanity. But that made us some money here. Shorted here, went long here. That was good. Actually, went long here, shorted here, and then went long here. All right, so back to the task at hand. Apple. The serious note on Apple. So last night, today is, I don't know if I said it, April 17th, Friday, end of the week, long week apparently. And we had some action last night. There was news of Gilead and kind of muddled news. Some people thought it was a vaccine, a cure, or whatever. It definitely wasn't either of those two. It wasn't even a Gilead. It was news from somebody that's using their stuff. And it was the fact that they had therapeutics that's working, remdesivir or whatever it's called. So we're all virologists now, so I don't even need to tell you what the drug is because you already know. So Apple was here, the markets were here, and then the huge run. I mean, that made no frickin' sense whatsoever. But it was a relief pop, and I said it was shortable. And somebody who shorted the morning made a lot of money on Friday because of it, or shorted the night. Somebody sold Apple up here, made a ton of money. And Apple was actually red on Friday, while the markets were up 3 and 4%. And why? Because right here, Goldman Sachs. Goldman Sachs came out and said Apple has risk 20% to the downside. So 20%, that will put it, I'm going to eyeball it, somewhere down here. Yep. Okay, so I agree that it has some downside, and I'm going to share a few things. First, a little background. Not too long ago, I did a video on Apple, and it rallied $30 to $40 from it. And I had these similar orange lines on the way up. They were triggers, and they triggered, and I'll see them at a lower time frame. Well, right here, it's definitely not an obvious long. So I agree with Goldman Sachs on that perspective. And in fact, this was a short attempt for somebody who's actively traded because of a prior failure. So the thesis becomes, when it comes to a place to where it's just failed, then the thesis is it's going to fail again, and onus is on the bulls to prove me otherwise, correct? So if somebody is actively trading, they can short it with a tight stop, so either make a lot of money or lose a little bit. That's the concept. Now, there are a few wrinkles here, but I'm going to tell you my perspective. Technically speaking, it has triggers, and I reset them. So I think they would be more visible if I go to the 120. Okay, so this is a 2-hour chart, meaning every candle is 2 hours. So the tightest range is right here. Nothing to do until it breaches these two lines. If it breaches this one, you could follow it higher a little bit, and then I'll say, okay, short it here. So fade it up there. And if it breaches this one, it could be headed here, which could be a buyable point. Depends on how it happens. This is the orange line, is where people love to trade it. It's the busiest point of the whole thing throughout this time. So from February on to now, from January until now, this is the busiest point in Apple. So if price falls to it, it's buyable, meaning the dip, it should find some support. Is it a hard line? No, it could actually fill this gap right here. That's why I have 2 lines. So if it comes to here and the action is wishy-washy on the downside, it's buyable. But if it's hardcore, systemic downtrend, I'll let it until let's see if they want to fill this, and it's better buyable here. Now, if this fails, or more specifically, this fails, I should do. So this is a buy the dip. This is a sell it. This is to sell it for a little bit more downside. I don't want to even put it to fill this gap. But I'll talk about this a little bit later. So these are the triggers now. You see them. Write them down. Trade them however you want. If I'm long Apple here, I would sell. If I'm long the stock, I would sell covered calls against them. Careful, we're going into earnings, so I would want to be a lot higher and out in time, so I don't get called away from my shares unless I'm okay with that. If I'm long Apple on a trade, I would book it if I haven't done so already, etc. So I'll tell you why I'm bearish about Apple as a trade, not as a company. I can't stand their CEO. Actually, I shouldn't say that. I don't know him. I can't stand the credit he gets for being a great operator. And he is the worst operator with a major company like this. I have never heard anybody mess up their launches more than them. Always they're having supply chain problems, maybe because they hold it so tightly and nobody can say anything, and it's tight. You know, they make them here, they assemble them in China, they ship them to China. It's weird setup, and they always run out of everything, which is a good thing because they're selling out. But it's not a good thing when you can't have it. You announce something and you can't have it for Christmas. That's a really bad thing. So operationally, they're suboptimal. Let's put it that way. To borrow from Jim Cramer, suboptimal. So, so here we go. I'll tell you my concern. Other than the technicals, I share the technicals. I'm not everything. I am fundamentally driven, but technically swayed. I don't do anything without the technicals because they are more right than my opinion. Price is truth. It's never lied to me. I get more thing wrong fundamentally. So, but I'll tell you why. The fundamental issue with Apple right now. So, what's the biggest thing in cell phones right now? Smartphones right now. Telecommunications. 5G. Okay, so I'm going to go in here. 5G phones. How about that? Samsung. Moto. I don't see any Apples. I went to Google and I did that. So I go to T-Mobile. I bet you they'll have 5G all over. Every ad I see on TV with T-Mobile and Verizon, which are the most aggressive, 5G, 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 5G. There's no 5G phone from Apple, so what are the Apple people going to buy? So I think it's the debate. Do Apple people love their content more than their phones? So if somebody wants to stream 5G, which is pretty impressive, you know, they can't do it with Apple. What if Apple can't promise one until next year, September? I don't know anything about that. You do your homework on that. But that's the pitfall. So if the earnings report comes out and they don't say anything great about 5G in the pipeline, that's going to be a big problem for Apple. So Apple is not cheap. Amazon is cheaper. What, you moron. So now it's not as cheap, but even Amazon at all-time high, look at all these alerts. Okay, so 5 is their price to sales. So their stock price to their sales is 5. And it's not even a growth company. They're trying to keep up some growth, well, as far as perception, right? So Amazon is 4 and change. Amazon was 3.2 up until 2 weeks ago, and then they rocketed. So now they're 4.3. So Apple's price to sales is higher than Amazon. That's because Amazon is killing it. It's growing like mad year after year. So the fact that its PE is high doesn't matter. They're two different companies. One is a growth company, in my opinion, and the other one is a company that's trying to stay relevant. I know almost half the phones in the world are run on it, but they inherited all of this, and that can go away. At one point, you know, Palm was 100% of the handhelds, or 98%, and now doesn't even exist. This is not Palm, clearly, but you see the point. They need to crank out, you know, it's not cheap is the point of this. It's not cheap. So it could definitely get cheaper. So technically speaking, let's talk about potential bottoms if Goldman Sachs is right. They're not idiots at Goldman Sachs, but I can tell you, just looking at this chart, this line here should be good support. Good support. This whole zone should be great support. I'll tell you why. We're looking at daily candles. See, one day, right? I'm going to reset it. This is 1 year's worth of data on a daily candle. I'm going to tell you a little something about volume profile. All these, look at the bunches of bars down here. That's volume. But look at this mountain right here. What does this do? It made it so that the value area, this highlighted yellow area here, which is right here, is the heaviest action it sees. So right here, failing is totally normal. It's failing towards the top end of that value area. So once it's falling, you get to the highest point of trade, right there, that orange line, right there. That's where the bulls and bears agreed the most on this. They fought the hardest. Buy, sell, buy, sell, buy, sell. I shouldn't say bulls and bears. Buyers and sellers, because bulls buy and sell. And so buyers and sellers. This point is important. Look how important it is. It happened here, and that was the roof here. So there are no coincidences. This candle right here, I can draw an eyeball line right there. So I'm going to do this. Bring out the crayons. Money line, almost skewed. All right, ignore this. Follow me. Ignore this. I see what Goldman Sachs is doing. If this happens at any rate, and it hits this same line, this line right here, bounces and then loses it. So if it loses 260, my point is there is support through 260. If it loses 260, and more specifically this one accelerates it. But really, I think 260 will get it done. It will try to fill this unofficial inverse cup and handle, or otherwise, I call this a ladybug, because it looks like a ladybug if you draw feet. And the goal would be to draw feet. And the goal would be somewhere around here. Okay, so these are a lot of ifs. Don't say Nick said it's going there. Nick said it's doable. And Nick says no trigger, no trade. Meaning what? It means it doesn't trigger. I don't expect it to come. If this doesn't happen, this doesn't happen. This doesn't happen. So first of all, you have to dip at whatever rate, lose this line, accelerate when you lose this line, then maybe you can get to 228. Why 228? It's not a scientific number. I came up with it on the fly. It is, so this here is the COVID crash. This is where the world literally ended. We got stuck at home. Nobody can leave. Nobody can work. Everybody shut down. Nobody flying. Nobody gambling. Nobody going to school. Nobody teaching. Nobody cutting hair. Nothing. Everybody at home. There's no income to companies. There's no income to people. And that's what happened. So what's the other scenario that's worse than that? So imagine. It could happen. But is there something? I mean, I don't know. World War III. Maybe. Now the bigger problem. If it loses this for whatever the fudge reason. 170 and then 140 are potential targets. This one more likely. What, you moron, they say. Nope, I'm not moron. Let's reset. Let's go to a weekly chart. Okay. To reset things. This is COVID crash. And you can see how pivotal it is. See that? Failed. What is going on here? I refuse to make this take 4. This is Skype. I mean, the people calling me from Skype, it's 2 o'clock in the morning. What are you doing, Mom? Anyway, so back to the point. COVID crash was pivotal. It wasn't a coincidence where they stopped. Look at it. It's exactly the neckline they broke out from. And it looks like halfway from here to here. It's probably exactly halfway. Anyway, so that's why I expect a hard line. So if it falls to here, I'm a buyer. If it falls to here, I'm a big buyer. That's what the way. It's a good place to catch a knife. Even better place to catch a knife. If this fails, we've got bigger problems. Way bigger problems. Way bigger problems. Christmas crash. So it's doable. Tariff war. And the tariff war, and then the Fed, we're on, what did he call it? Cruise control or something. And they said, oh, shit, I fucked up. No, we're not on cruise control. We are on, never mind. We're going to be cutting rates. Yep. Cutting rates. You know what? We're unlimited bullets. COVID. So it could get there. But there are a whole bunch of, this would be a stopping point, 190, 200. 180 would be, and then this definitely would be. I mean, if it falls to here, it's a really good buy if you missed any of the rallies. So you can see that it's not all bad, but it's going into earnings. People love to buy it into earnings and sell it on earnings. Apple. There's Netflix earnings coming next week, and it is a crapshoot what happens on the earnings. If Netflix rallies, everything rallies. If Netflix falls, everything gets a sour note. This looks like an early earnings move. Like it's too early. It started too early. Usually I buy my calls like 2 weeks out and I make money off of it. But this is like too early in my opinion. So be careful with that. So we'll see how it trades on Monday. Next week is going to be pretty important for the whole market. So if the market is up, then Apple will have some support. Doesn't necessarily have to run. Another caveat is that AMD kind of fell today, and it's been a leader, like a rabbit, I call him, and it fell today on a green day, so be careful with that too. So anyway, Netflix is the key next week for setting the tone on mega caps, and this is one of them. So I'm going to bail out of here before some act of God hits here, and if you have any questions, let me know.